Shantanu, set us straight. The stock is down a lot, but the fact is that Russia, Belarus, and Ukraine were the main reason why I think you did not make the projections.
Well, Jim, it's always good to be on your show. And as far as we're concerned, we had a great Q1. When you look at it, one of the things that I think your viewers also have to remember is that you have to look at the growth on an adjusted basis, because in the same quarter a year ago, we had 14 weeks, and this quarter we have 13 weeks. And so when you think about it in terms of the revenue growth, which was 17%, when you look at digital experience, which is how we help enterprises with their engaging customers, subscription revenue growth on an adjusted basis was 22%. The document cloud or PDF was 26% year-over-year growth. So the business is fundamentally extremely strong. I think people have to think about it as it relates to the seasonal cadence. And then in terms of moving forward, to your point, we wanted to be completely transparent about the impacts of what is happening in terms of externalities. And I was listening to you on the show as you talked about how your sort of call to action in terms of getting back normalcy. But as it relates specifically to Russia and Belarus, we are both saddened and shocked, frankly, at what's happening as it relates to the war in Ukraine. So we've stopped all new sales in Russia and Belarus. And in addition to that, because you have a subscription book of business, you do not have the ability to collect payments. So we've actually reduced both the ARR, or the annualized recurring revenue, as well as the revenue for the remaining 3 quarters. So there was a lot of information that I think investors need to digest, but the fundamentals of the business continue to be extremely strong.